Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is the Kickstart video where I take a look at three of the major currency pairs, the euro versus US dollar, dollar versus yen, and the sterling versus US dollar from a technical perspective. We did have some fundamental news come out with the PCE, US PCE data for March coming out. Recall from yesterday, we had the GDP number come out, and included with that is the quarterly PCE, which was higher than expectations. So thoughts were that today's PCE, either the data for this month or prior months was going to be revised higher. It seems like there were little nuances in the monthly numbers, January, February, March, and perhaps most of it being in January, which can be a bit wonky because of year end and beginning of the year changes in prices due to the Christmas holiday shopping. So there is a little bit of a sigh of relief. We're seeing yields move a little bit lower. We're seeing stock prices actually come off a little bit from the pre-levels now. Of course, we did have the Microsoft and Alphabet report earnings after the close yesterday, which were better than expected. So that helped to boost up the indices, in particular the NASDAQ index. We're seeing Microsoft shares up 3.45%. It was up higher than that. Alphabet shares are up 11.26%. Apple shares are up 0.32%. And NVIDIA shares are up 1.47%. Just to give you an idea. In pre-market trading. So I said we were going to talk about the three major currency pairs from a technical perspective. Let's get started. All right, looking at the hourly chart of the euro versus US dollar, what we saw in trading here today was that the price actually did move a little bit above the 50% retracement in early European trading, maybe late Asian trading. Maybe that was off the Bank of Japan. We saw Bank of Japan decision. We saw the price move above the 50% retracement at 1.07425. But that was short-lived. In the next hourly bar, we used that 50% retracement as resistance. So traders are leaning against that level off of the PCE data. We also saw the euro come up to that 50% retracement level, but then rotate back to the downside. We are now making new lows and back down, testing the 38.2% retracement of the same, move to the downside. So this is a support level for this pair. Recall from earlier this week, we did have some issues near that 38.2% retracement. Well, it didn't put a straight line, but you get the point right here. We came up to it, fell off, came up to it, fell off, came up to it, broke through it. Did have a rotation to the downside yesterday that took the price all the way down all the way down to the 100-hour moving average. That was after the US GDP and PCE data, but the market quickly swung back to the upside and back above the 38.2% retracement. So guess what? 38.2 is a barometer, and also the 100-hour moving average on this chart is also a barometer for bullish above, bearish below. If this level can hold, then we can get above this swing area right here again and get above the 50% retracement right here and stay above that level. It's more bull. Obviously the bulls are in more control. Conversely, if we break below the 38.2 and get below the 100-hour moving average, things would look more bearish with this swing area down here as the next target on the downside for this currency pair. So that's how I see the euro versus US dollar. Let's take a look at the dollar versus yen. And we did have an interest rate decision come out in Japan. And they didn't really talk up the yen. The dollar yen has been moving to the upside, lower yen in the process. And the thought was perhaps that they would do something. Well, they did do something. They didn't mention bond buying, so that sent the dollar yen to the downside initially. But then they started to chirp a little bit, comments, and there was no opposition, strong opposition, I guess, to the yen's weakness, and they said they were monitoring it. It has an impact on inflation, so on and so forth, but they didn't seem very concerned, so we saw the rotation quickly back to the upside. By the way, the move to the downside did get below the 100-hour moving average. We've been looking at that because it held support more or less here, and here, all these places along during this week's trading before rotating to the upside and trading yesterday. But the price couldn't get below the 200-hour moving average, which is always another key target, and the price hasn't been below the 200-hour moving average going all the way back to beginning of April. So, this area was a support area, and as you can see, the market quickly moved to the upside. Now we are further away from the 100-hour moving average. Is a big area between here and here. Traders are thinking, well, maybe if it's 155 isn't a resistance and 160 is where we're going, and that may be true. We will see. when you do get these sharp moves to the upside, and we're away from things like the hourly moving average or even retracement levels like the 38.2% retracement of this last move to the upside, sometimes it makes sense to take a look at the 5-minute chart. And although ignore this this action off of the rate decision and pay more attention to things like this rising 100 bar moving average. Yes, we did have another little move to the downside here that took the price below that level, but it quickly rebounded again. And there's lots of quick rebounds in the dollar versus yen. So what I'm trying to get at is that if the sellers are to take more control, they need to get and stay below things like this level right here. They also need to get below the things like the rising 200 bar moving average right here. If they can't do that, then guess what? The buyers are not, or the sellers are not winning. The buyers remain in control. So be aware of those levels. Let's take a look at the sterling versus US dollar next. And this currency pair has also had some up and down volatility. The rise in the upside, just like we saw in the euro versus US dollar, did take the price to a new high for the week, new high going back to this day right here, April 12th. But we fell short of the 61.8% retracement of the April trading range. Also fell short of the falling 200-day moving average. That level, these levels come in at 1.2551 and 1.2557. Ultimately, if the price is going to go higher in this currency pair, we need to get above both of those levels. So be aware of those levels on the top side. But the price has since moved back down toward the 1.25 level and back toward the 100 bar moving average on the 4-hour chart, and also the 50% midpoint of the move to the downside from this April high to the April low. So trading above and below that 50% retracement, like we did in trading yesterday as well, as you can see. So there is, it seems to be somewhat of a magnet back down toward this area right through here. And if the price were to move further below this this level, you maybe get below these lows right here, then we could potentially see further downside momentum like the euro versus US dollar back toward the 38.2% retracement as a level of interest. Also, there's this level right through here, which was a ceiling not only here, but here and here. And we did trade above and below it yesterday before finding some support against the level right through here. So there is some history at this level, at the 124.82 level. So be aware of that. And then down to the 38.2 at 1.2455. So that's my technical looks at the three major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.